Greetings everyone, Jake Bernstein. It is Saturday, the 26th of January, 8:46 a.m. in Santa Cruz, California. This is your trading lesson for the week, and thank you for putting up with my voice. Slowly but surely, it's getting better. Today we're going to talk about catching the falling knife, an expression that you've probably heard me use many times, as well as others. What does it mean to catch the falling knife? Let's put it in pragmatic, operational terms. Here's the situation. Friday, and this applies to futures as well as to stocks. Intel. Let's look at the daily chart within the context of the moving average channel. Within the moving average channel rules, Williams, the blue line, was above the brown line over here, and we had two bars above the top of the channel. Buy, setup, and trigger. You have two choices. Choice number one, buy immediately, profit target 2 times the width of the channel measured from the closing price of the second bar. Conservative strategy, wait to buy the bottom of the channel, which occurred right over here. Target number 1, top of the channel, which was hit right over here. Let's assume you're now out of that trade. Prior to the opening on Friday, which is this day right over here, Intel announces earnings, which are a disappointment. We know the stock will open lower. We know from the pre-opening price that it may open below the bottom of the channel. Your choice. Catch the falling knife, by which I mean try and catch it while it's still moving down. Place an order to buy at the bottom of the moving average channel, which would be filled right on the open, and sit through the move against you, which could scare you out of the position. Or is there another choice? There is another choice, but let's talk about the alternatives. If you bought the opening below the bottom of the channel, by the end of the day, you made some money. Your target as a CMC trade, which is what this is, Cuban Missile Crisis trade, would be the bottom of the channel. Target number 2, the top of the channel. As a position trade, as opposed to a short-term trade, by the end of the day you have made money, but you have to sit through all of this first, and that might have scared you out of the position if you're not psychologically prepared, or if you're sitting and watching too closely. Alternative, wait until the opening. Once the market opens, switch to a smaller time frame using the 8 open close method. Let me show that to you on this stock. Here's the 8 open close method right over here. And let's bring up Intel. INTC. Time frame, 10 minutes. So let's go to Friday. I'll show it to you. And remember, we're only using the 10-minute time frame with the 8 open close as an entry method to fine-tune so we don't catch the falling knife, by which I mean we don't try and get in while it's moving down. This is your 10-minute chart. Why 10 minutes? Because the markets turn very quickly these days. Sometimes you have an opportunity. They'll be so quick you'll miss the boat. You could use 15 minutes, which is what I used to use, but now 10 minutes is more appropriate. So go to the 10-minute time frame, 8 open close. You'll notice for all of these bars, 8 open close remain in bearish mode. It turned bullish right here. So this would have been our entry. Slightly better than where we would have bought on the open, and certainly by the end of the day profitable as well. That's how I like to fine-tune things. Think about it. This holds equally true to stocks as well as futures. Try it a couple of times, go look at some back history, and see if that saves you some grief. But remember, in order to do this successfully, you need to be sitting there watching the market all day long, or at least for the first hour or two on the opening, when you get these big gap down openings. That does it for today. I hope you enjoyed the lesson. If you have any questions or ideas for a lesson, let me know. I've got plenty of ideas myself, but if you have something specific you'd like me to cover, let me know. Jake at trade-futures.com. Best of trading to you.